Longtime Tesla bull Cathie Wood isn't buying into the recent surge of legacy automakers like Ford and General Motors. So, what is it going to be for investors? Will they avoid Ford and General Motors to maximize on Tesla? Well, we're about to find out. Welcome to Stacking Stocks, and thank you for joining us today. Hit the notification bell for updates on more videos like this. Do you know that 10 years ago, Tesla was the only automaker taking electric cars seriously? These days, just about every automaker either sells or is planning to sell electric cars. Plenty of those cars are due in 2022 with luxury features that give Tesla a run for its money, whether that's advances in driver autonomy, faster recharging capabilities, or range that come close to giving the Model S a run for its money. Some of those cars are proving to be incredibly popular as well, like the Ford F-150 Lightning. Ford received so many reservations for its electric truck that it had to stop taking them. 2022 is going to mark the year where Tesla is going to have to step up and start taking the rest of the electric car industry seriously. So Ford and General Motors recently recorded an upward trajectory, far outpacing Tesla's loss. That's a continuation of 2021 trends, with Ford surging 137% compared to Tesla's jump of 50% last year. Ford hit its highest level in 20 years in the first week of January 2022 after it announced plans to double the production of its electric F-150 to 150,000 units by 2023. General Motors also saw a stock price boost after it unveiled the electric version of its best-selling pickup truck, the Silverado. Well, Cathie Wood seems to think the recent surge by Ford and General Motors is ridiculous. She noted that they soared on those electric vehicle announcements while adding that electric vehicle sales represent only about 2% of traditional automaker sales, while the rest are driven by gas-powered vehicles. Wood seems to wonder what if the other 98% or so are on their way out as the consumer preference shifts towards electric. Wood pointed to a decline in consumer sentiment, building inventories of used cars, and increased supply of semiconductors as an indication that the recent drop in new vehicle sales and non-existent recovery isn't simply due to supply chain issues, but rather consumer demand, and that's a big problem for traditional automakers. They have problems because their gross margins, depending on the company, are somewhere between 10 and 20%. Well, if they don't have a lot of room for error, then that's not really good news. What if there's no 20% increase in sales? They'd probably have to start cutting prices if Cathie Wood is right on the used car market. This means they're probably going to be facing credit issues since they're hugely leveraged to the credit that people take out on their autos. Wood tends to think that there's a lot of complacency in that market. Wood believes Tesla and electric-forward automakers are a better buy than the traditional automakers and suggested a company like Ford or General Motors could post a surprise loss next year as they see increased spending to transition towards electric vehicles and less demand for their gas-powered cars. Cathie Wood's actively managed ARK Innovation ETF has become the gold standard for high-growth equities. Investors are putting their faith in Cathie Wood's stock-picking abilities for their market-disrupting portfolio allocation after the incredible performance she displayed out of the depths of the pandemic. The world moved digital adaptation up by 10 years in a matter of 10 months as the global economy went mobile. This rapid digitalization, combined with record low interest rates, drove ARK Innovation ETF's fourth industrial revolution-oriented holdings up an incredible 380% from its March 2020 lows to their highs in February 2021, with Cathie making the bullish call of the decade on Tesla. Cathie Wood confidently said that ARK Innovation ETF would quadruple in value over the next 5 years. And with the fund now trading under $100 for the first time in over a year, there's a rare opportunity to get diversified exposure to the nascent innovation of the next decade. But that's just about ARK ETF, whose investment portfolio is still largely into Tesla despite offloading some of their shares. Cathie Wood said that if Tesla is to be the first successful autonomous vehicles in the U.S., then not only will Tesla take that biggest share of the electric vehicle market, but it could also take 20 to 25% share of the total auto market in 5 years. She predicts the stock will hit $3,000 in 2025. The main reason for that is their market share. Instead of going down from year-end 2017 to today, it has actually gone up fairly dramatically. At the time, Tesla was trading at around $733 and would have to go up more than 300% to reach Wood's price target. With a share price of $3,000 per share, Tesla's valuation would be $3 trillion. That's a feat that might have seemed far-fetched to some at the time. However, Tesla reached a valuation of $1 trillion by October 2021 after Hertz ordered 100,000 Model 3 vehicles for its rental fleet. Tesla's share price has since risen significantly, almost to the same heights pre-stock split, until Elon Musk announced he would be selling some of his shares. But that has since been reversed, with Elon Musk stating that he is as good as done with selling Tesla shares. Well, the most obvious factor driving Tesla share prices is that the company is constantly coming up with innovations and is led by an entrepreneurial maverick in Elon Musk. There's also no doubt the world will embrace electric vehicles over the coming decades. Tesla already has an enviable position in the fast-growing marketplace. The range Model S, Model 3, Model X, and Model Y are not only technologically advanced but visually appealing, which is why so many more are being seen on the roads. The company might also benefit from any increases in fuel prices or government regulations on more traditional internal combustion engine vehicles in the next few years. Tesla is looking at a busy 2022 when the electric vehicle maker is slated to open new factories and start delivery of its new vehicles. Tesla is also expected to sell nearly 1.5 million vehicles in 2022, compared with the 936,000 vehicle deliveries in 2021. Tesla, which has also moved its headquarters to Texas from California, a step it announced in October 2021, plans to make the 2,000-acre property an ecological paradise that'll be open to the public with boardwalks and trails. The factory will also build Model 3s and Model Ys for the East Coast and the Tesla commercial long-haul truck. Tesla's Berlin, Germany factory is also slated to start its production line this year. After numerous delays involving regulatory approvals, Tesla has been somewhat constrained in production, and having other factories come in line will ease some of that stress. The fact is that Tesla can't afford to stand still. The company has a reputation for pushing boundaries and changing cars to offer a uniquely Tesla experience, for better or worse, whether that's adding video games to the infotainment system or the infamous yoke steering wheel. Increased competition means that it's more important than ever for Tesla to keep digging deep in innovations. Chip shortage or not, we can reasonably expect Tesla to make some serious changes. That includes smaller tweaks to performance, improvements to cars running the full self-driving autopilot beta, and more significant upgrades to upcoming cars. It's hard to say what they'll be, especially on the higher-end Model S and Model X cars, but they will be coming. As far as we know, Tesla only has one car due to be released in 2022. However, that doesn't mean it won't have plenty more to announce throughout the year, especially as competition from other automakers revs up. Earlier this year, we got the announcement that Tesla was developing a smaller hatchback car and aiming for a $25,000 price tag. While that EV isn't due to arrive until 2023 at the absolute earliest, it does mean that Tesla could have some more surprise announcements in the pipeline for 2022. Make sure that you watch out for them. If you enjoyed the video, remember to like, share, and subscribe. Thank you once again for tuning in. See you next time right here on Stacking Stocks.